Hey everybody, it is me, Corrie Sommers, and today I'm here with Mark from Chartwell Escrow, and we're going to be talking about taxes in regards to the sale of your property or the purchase of your new home. So stay tuned, we'll be right back. And if you haven't subscribed to my YouTube channel yet, go ahead and do so. Click that subscribe button below and the bell for updates. We'll be right back. Hi everybody, it's me, Corrie Sommers, your local Los Angeles luxury realtor. And as I mentioned, I'm here with Mark, who is with Chartwell Escrow. And you know, as the beginning of the year turns, we start to think about things like taxes due in April and stuff like that. But sometimes we forget about taxes in relation to what happens in the sale of your home, as well as the purchase of your home. So we're gonna talk from that perspective in the escrow process. How does that all play out?
So let's talk about the dreaded taxes.
Yeah.
So the tax year runs from July 1st through December 31st, and that's the first installment. The second installment, which we are in now, runs from January 1st through June 30th.
And I know sometimes that seems really kind of confusing because you would expect that you pay your taxes once a year, but here in California, it's 2 installments, it's 2 payments. Now, typically, when you are selling a home, you pay taxes based on the price you purchased the home at, right? And assessors kind of come around and maybe do a soft assessment every so often, and very rarely do we see like a jump in your taxes. It's typically the tax rate changes when you've sold your home and that new buyer pays a tax rate on your property based on the sale price.
That's correct.
And so when you're getting all your escrow docs and you're looking at your, it's on their
estimate.
On their estimate, okay. As a seller, on your estimate, you're going to see a section regarding taxes. Explain what they're looking at.
So on the seller's estimate, when we're closing in the second half, we would charge the seller the full amount, but then we would give them a credit from the buyer from the time of closing through the end of that fiscal year, which is for the second half, it runs through June 30th.
Okay. So I just want to be really clear on this because I've gotten some frantic calls after closings where both buyers or sellers feel like they've maybe paid their taxes twice. It's pretty impossible to pay the taxes twice, correct? It's a matter of whoever's check gets to the assessor's office first is the one that clears?
So let's take, for instance, say you're the seller and you have an impound account. Well, by the time of closing, if those taxes are not showing paid, we must pay them. We go ahead and pay them, and so the way the tax collector will take the checks, whoever check gets there first, the other check will be refunded back. Now, there are some times that we're able to hold those taxes. So we will hold it until the taxes are showed paid.
So just for a little clarity to recap, you're selling your home and you're looking at your estimate and you're seeing that you're being charged the full amount of taxes for that next installment. But you're saying, hey, wait a second, this is gonna close in 2 months and so I shouldn't be paying all of this. That's where you're gonna see a credit coming in from the buyer.
Correct, and you'll see that on the estimate at closing. You'll see that actual proration of the credit from the buyer to you as the seller from the time of closing through the end of the fiscal year of that second half taxes, which is through June 30th.
Okay, so I say that, like, don't panic, but if you don't see that credit, call escrow and just say, hey, I want to make sure I'm reading this correctly. It looks like I'm not getting a credit, or can you confirm there is one? People make mistakes, and we want to make sure you're taken care of.
Not this escrow company. We don't make mistakes.
Chartwell is very good when it comes to taxes, which is why we're doing this video today. Now, we're going to kind of switch that in reverse. If you are the buyer and you are purchasing a home, now you are going, and it's the second installment, sorry, because we're at the beginning of the year, so you're responsible for that second installment.
Correct.
Okay.
So the buyer will be there will be a charge to the buyer from the closing through the end of that fiscal year, which would be through June 30th.
Okay.
And then their responsibility to pay for the full installment of the 2020-2021 tax year, which will be due November 1st.
Okay, so here's a question I want to kind of throw it at you. Since in the middle of this purchase, we're in that first installment, so that first installment is based on the price that the current seller has been paying on their taxes, which is based on their purchase price. Now the buyer's purchasing, and obviously that's a bit of a higher price. So that first installment, or I'm sorry, the second installment is made for the June. In November, is there going to be a supplemental tax between that payment in November, or is November going to be kind of making up for whatever difference?
That's a good question. So if you're closing in the beginning of the year, January, February, yes, the buyer will be getting a supplemental tax. And the supplemental taxes would come maybe about 30 to 45 days, even longer, depending on when the city reassesses the property. And they'll be getting another bill, and it will say supplemental on the bill. If they get it, if they're closing towards the end of the fiscal year, most likely they might not be getting that supplemental, and it might be added on to that November bill.
So this is a question I want to ask, because if you're purchasing a home and they're looking at their closing estimate and they're seeing that the taxes is this thing, do they ever get something that says this is what your taxes should be?
No, not from us. But one thing we calculate is like 1.25 is usually what we calculate on the sales price if they're trying to get a ballpark figure.
Okay.
And then divide that by 2.
Yeah, so that's something important to know. If you're purchasing a home, always know that your taxes in Los Angeles, the county of Los Angeles, is 1.25% the total purchase price of your home. So if you're purchasing a home, let's just say for $1 million, your taxes are going to be $10,025. And then divide that in 2, and those are what your 2 installments are. And if you really want to break that down further, divide that by 6 months. Or take the total and divide it by 12 months, and that's what you should be impounding into escrows through your loan. Or if you are not in a loan and you've purchased the property cash, that's what you should at least, at the bare minimum, be putting aside for your taxes and whatever type of an account you're doing that, whether it's a separate bank account or if you have even opened an escrow just specifically for your taxes. That's one way to handle that.
And you can always call escrow. You can always call
Corey. I'll help you out. Anything else they should be aware of that a seller will be seeing on any of their?
Well, one thing to do, I want to explain the first half taxes. The first half taxes are due November 1st, and they're delinquent December 10th. The second half taxes are due February 1st, delinquent April 10th.
Okay. So important things to know, because it doesn't go with what you might think the fiscal year to be, or even if you work in a corporate situation, you know, we have the 4 quarters, it works a little differently, and this is just based on the city, the county tax assessor's office, and this is what they've deemed, and this is what they are. So just really important, might be something you want to make a note mentally or in your calendar that these are due, those are the dates. So hopefully this information has been really helpful to you. If you have more questions or you want to just run something by an escrow officer, all of Mark's contact information is below, and he can help you with anything when it comes to escrow. And you know, even when we're selling your home, a lot of times I recommend that we open escrow in the beginning, and that way any kind of documents that are going to be done in the process, whether it's ordering the 9A or anything else that will help speed this up, can be done ahead of time and really help your transition of the sale of your property go very smoothly.
Yes.
Any questions, put them below. Thank you guys so much for watching. And as always, if you haven't subscribed yet to my YouTube channel, go ahead and do so now and click that bell for updates. Thank you so much for joining me today, Mark. I appreciate it.
She's an amazing agent. She really is.
Yeah, I'm who you want to work with.